All right, so let's get rolling. Hey everybody, thanks for joining. Really appreciate you guys taking the time to join us here. So this is the first of a series of Fintech Share events we want to do, and this particular one is financial lenders and fintech companies innovating through crisis and recovery in the post-COVID world. That's the title, and what I want to do is just kind of set the stage real quick. So these indeed are unprecedented times with the pandemic and the economic shutdown. This also brings unprecedented opportunity, I believe. And so fintech, we've seen, is playing a major role in the response to this and supporting businesses and supporting consumers. And so for this particular talk, we're going to focus on the business lending side of things and with this group on the phone, and just talking about how through the crisis, from the very beginning of it and when we knew the economic shutdown was coming, how the industry and you guys, particularly our panelists and your companies and your networks and your partners, reacted to that. And then what's the response look like? And then how are you seeing recovery and innovation coming out of all this? And really often crisis in our lives as humans and in businesses and in the economy is a catalyst for innovation. And so I want to talk a bit about that and kind of hear from you guys on that. So looking through the last 90 to 120 days, we're going to step back in time, and then we're going to move forward into today and then start looking beyond that. So with all that being said, for those of you who are joining us now, if you look at the bottom of your Zoom screen, you'll see Q&A, and the Q&A is an opportunity for you to submit questions. And it already looks like I've got some questions in there, so that's great. Myself and the panelists can see those, so be sure as we move along through this, if you have questions, please submit them. One of us may address some of those questions as we go, but ideally, I think what we're going to do is try to get through all the information, share a bunch with you, and then at the end, open up the dialogue for some open Q&A, and we can start with some of those ones that you've submitted. And also, thank you for those who submitted questions in your registration. We've got those too, so we'll be sure and talking about those. So to get things rolling, I wanted to just allow you guys to do quick, like 30-second intros, and then we'll jump right into the topics. So Patrick, why don't you start?
Awesome. Thanks for having me, Rory, and really excited to be a part of this conversation. My name is Patrick Davis. I'm the Vice President of Program Strategy and Development at Community Reinvestment Fund, for short, CRF. CRF is a national nonprofit community development financial institution. And actually in a recent conversation I had with Jason, one of my co-panelists, I realized that we are actually a fintech as well, even though maybe we don't identify as one. So really focused on providing financing to folks in historically underinvested communities.
Wonderful. Where are you located?
Our team is in Minneapolis. That's the headquarters, but we've got folks all over the country. I am in the DC area.
Awesome. Thanks, Patrick. Jason, how about you?
I'm Jason Henricks. I'm the CEO of Alloy Labs, which is managed by Fintech Forge. Alloy Labs is a consortium of 40 plus community and mid-sized regional banks that work together to drive innovation and collaboration. So a lot of what you'll hear from me is actually not just a single point of view, but kind of the collective wisdom of about 40 banks that by combined assets were actually the 20th largest bank in the country. And as Patrick just alluded to, I am also the co-host of the Breaking Banks podcast.
Awesome. And where are you located?
I am in Minneapolis. I used to joke I live in the Admirals Club, and I guess this is the longest I've gone without boarding an airplane in a very long time.
I'm sure your family loves to have you at home. Awesome. Thank you. Well, hey, Greg, how about you?
Good. Hi, I'm Greg Ott. I'm the CEO of NAV. NAV is essentially a gateway for small businesses to find financing. We would typically sit over 60 different lenders, hundreds of different credit cards, and then we allow small businesses to use their actual credit qualifications to find what they qualify for. So everything from bank loans and SBA loans to CDFIs to fintech lenders, small loans, large loans. So we're a gateway. I'm sitting in just outside of San Francisco. We have offices in Salt Lake City and outside of Philadelphia.
Awesome. Thank you, Greg. And Laura.
Hi, everyone. Thanks for having me, Rory. I'm Laura Cozy, and I'm the Senior Vice President of Marketing at Pursuit. We rebranded 2 weeks before COVID hit. We were formerly New York Business Development Corporation. So that has been an interesting ride. But we are a non-bank lender that specializes in the SBA loan programs and providing loans to people who need products, terms, or requirements that they can't find at traditional banks. And most frequently, those are minority, immigrant, and women-owned business groups.
Wonderful. Thank you, Laura. Yeah, it was fun to be part of that rebranding. So, all right, wonderful. Well, thank you guys for the intros. I'm going to go ahead and open it up here. So kind of setting the stage, we talked a bit about, what the context of this is. But again, this is like the impacts of all of this are unprecedented. We've never had a global economic shutdown, much less one in the United States. And we wouldn't know until we went through it what the impacts with that would be and how we would even react. And so I wanted to kind of start there and asking Greg, kind of going to you first, talking about the atmosphere at NAV and kind of with your partners and maybe with some of your clients too, when all of this started, like in the very beginning. How did you guys react, and like what was the atmosphere like at NAV?
Yeah, it was really unsettling. I think it was this overcast of uncertainty and then fear, because the healthcare crisis started, and we had to shut down offices and shut down travel, and then the financial crisis started, and so NAV sits on top of all these lenders. And then the lenders stopped lending. And so you had this double impact of it was kind of sat on Maslow's hierarchy. People just went down the pyramid, down towards they're more like, what's going to happen to me? How am I going to see my family? So it was really unsettling. We kind of prioritized according to that, which was getting everybody settled in distributed workforce. So we were Amazon ordering stuff left and right. We had to update our security systems because we sit on credit data, so we had to make sure people could access credit data from their homes. So we kind of got the workforce up and running, and then we really tried to connect on the emotional needs. And so we did. We had a daily update from an exec member. We did Zoom side chats every week, and then we did kind of surprise and delight things. We sent to everyone's home a lasagna or DoorDash gift cards. The lasagnas went over really well.
Why did you choose lasagna? Like,
it could feed a family for days.
Oh,
so,
true.
Again, that fear and uncertainty just kind of settled in, and it's like, what's going to happen to me, about my family? And so we tried to address that first, and what's going to happen to my company and my job. Try to address that secondly, and try to maintain some kind of connective tissue for that. The silver lining was, really, and you're hearing this a lot of places, our distributed workforce has worked really well. We've always had distributed workers. Some of them, we use them to say, what are the best practices for distributed work and creating and maintaining connective tissue. That connective tissue at the workplace, I think, does so much to stabilize people's feeling of uncertainty at home and other places. And so we worked really hard all the way through. I think we shut down the offices the second week of March, and no one's been back since. But by the first week of April, I think things were up and running, and people were a lot more comfortable.
Yeah, we're really fortunate. We've always had a remote workforce here at Customer, so we didn't really miss a beat from that standpoint. But I can imagine, and Jason, I want to ask you this, is, with the fintechs and the impacts of the underwriting and everything else, there had to have been some actions, I suspect, that some of the banks and lenders, and Laura, maybe you or Patrick can speak to this too, just battening down the hatches, almost like, what's going to happen? What are the impacts of this? This is before PPP and the CARES Act, so shortly before.
Well, one of my personal favorite stories from one of our banks is they were sending everyone remote was a run on paper, and I don't mean toilet paper. They had such a paper-based product that they had basically gone and cleared out, Best Buy and others. And this banker I was talking to is like, do you know where we can get more paper? And like, wait a second, maybe the question you should be asking yourself is, how do we do this without paper? Right? Like, if you're buying printers and paper for everyone to be able to print from home, maybe that's the wrong answer. Yeah. So I think what we're going to see part of is this is a real good reason to bring forward a lot of people digital agendas to like, oh, maybe the cloud isn't so scary and there's other benefits there.
Absolutely. Anything Patrick or Laura? Patrick, you want to add?
Yeah, I think for us in so CRF is one of over 1,000 community development financial institutions, CDFIs across the country. I think this time really harkens back to the post-housing crisis era in 2008, 2009, when CDFIs really flexed their muscles and leaned into the gap around financing and really tried to expand their loan programs, particularly in the housing space. And that's the role of CDFIs. That's what we do, right? We're counter-cyclical in some ways. When credit tightens elsewhere, we really try to expand access to credit. And so I think we're starting to see, well, we have seen the same thing in the small business space now. We've seen a lot of CDFIs initially certainly very concerned about their balance sheets, about their portfolios. CDFIs, as you can imagine, tend to be overexposed to industries that have been hit by the crisis, food service, retail, et cetera, that often have a hard time getting bank loans. So there was certainly a moment of, okay, let's assess the impact on our balance sheets. But then from there, it's kind of like, okay, this is go time, team, right? Like, this is when we shine. And so I think we'll give some examples of that, but I think this is really a time when CDFIs in particular are working through their relationships with banks and other fintechs to say, look, we have some unique assets, we have unique sources of capital. How do we play a bigger role in this moment? And I know Laura can probably relate to that as well.
Yeah, totally. I mean, Pursuit has a CDFI arm, and the thing that I'll say about CDFIs is we usually see the canary in the coal mine before everybody else does, with the working with the smaller of the small businesses. It was nobody knew what was going to happen with COVID. I think it was the end of February, and I live and work in Albany, New York. It's a medium-sized town upstate, and up here we were like, is this real? Like, what is going to happen? And our phone lines started picking up. People started calling from more urban areas in Pennsylvania, New Jersey, and New York, asking to defer their loans. And that's when my team and we were like, okay, something is going to happen here. We don't exactly know what or how bad. So, talking about battening down the hatches, one thing we had to figure out how to deal with really, really early on was, how do we take this influx of calls and how do we make our customers feel safe and secure? And how do we do that at scale? Because we moved from getting, 20 customer service phone calls a day to getting 500 or 600. So how do you apply technology to people working remotely to answer the phone lines? How do you put people on customer service who work in other job functions? So, those are some of the things that we were scrambling to figure out before we even went home. So it was interesting.
Yeah, as we move into kind of response, recovery, innovation in our next couple of segments, I definitely want to come back to that when we think about how the kind of the ship was creaking under the weight of all this new stuff, right? Like we weren't able to really address all the phone calls, the underwriting, and that's what I'm going to cover a little bit next with the CARES Act and PPP, because that was a whole nother situation for some of you. So with that being said, and talking about the response, when the PPP came out and began to hit, again, like impact was massive. And so we were all in overdrive reacting to it and trying to address the market. And this is where I think like fintech plays such a major role in just the technology piece to be able to do it all at scale. Whereas, some of the banks and lenders that weren't really prepared for it felt it like right in the jaw, right? It was a knockout punch of like, oh my gosh, I'm in a daze, what just happened and how the heck are we going to deal with this? So I'm kind of curious and thinking about one of the stories that you had told me, Patrick, and sharing about Equal Access International, and how have you guys responded with the PPP and be able to address this, and like what's some of that steps that you guys have taken, and then maybe share some specific stories, if you will, a story.
Sure. So I will say sometimes it's better to be lucky than good. And I think for CRF, one thing we had been building internally for quite a while was a sort of online loan origination platform, web-based and hosted, that we commercialized about 5 years ago. That's really all around government guaranteed lending. and most of the fintechs out there have really stayed as far away from government guaranteed lending as possible because it's complicated. It's not where you want to start and build your MVP, right? So I think we've been, because we are one of 14 non-bank SBA lenders nationally. We many years ago looked out at the market and said, is there a tool out there to help us do this really complicated lending? No, the answer was no. So then it's sort of all right, are we gonna build something from scratch? We went down that path, which probably seemed insane at the time, and then brought something to market and commercialized it several years ago. The real innovation of the tool and the platform is called Spark. Is that it automates the compliance components around SBA lending. So as you, the lender and the borrower, are building their loan package, the tool is essentially applying all of these validations, and it's not letting you push the package out to the SBA to get a loan number back until the package is perfect. And so the value of that in the PPP era was enormous and not something we were prepared for, frankly. So we have a small team. We're less than 100 people. Most of our people don't work on that tech platform. We had to shift people over, figure out how to support that. We had lots of, $100 billion plus OCC regulated banks reaching out to us saying, how do we license your software as soon as possible? We need to get on this thing now to do our PPP lending. So there was that whole piece and the partnerships that serendipitously came of that. But also for us in our own lending, being a mission-driven organization, we looked out and we said, we know what we expect the large banks to do, which is to go down their client list and take care of their largest clients with the PPP loans, and or take care of their riskiest clients, the ones who might have had the most outstanding debt or what have you. And that's pretty much exactly what we saw, right? There was a lot of blowback in the press around how PPP was allocated. And so we immediately jumped into sort of developing an informal referral network with other community development organizations around the country that didn't have the ability to originate these PPP loans, but they knew their customers. They could take care of the KYC stuff for us. They could help build the loan package. They could send it over to us through our tech platform, and then we could just originate the loan on our paper. And so we had this feeling like the tech platform that we had been working on for years and years was sort of this secret weapon in this moment of time for us to be able to fight for the nonprofits, the smallest of the small businesses, and ensure that they got a fair crack at the PPP funds as well. So we ended up both through our own lending and through the lending we facilitated on our platform, we've done over $5 billion in PPP lending thus far. And for an organization of our size, it's, I'm really proud of what we've been able to do. We've really punched above our weight class. And so again, sometimes better to be lucky than good, but glad everything has turned out the way that it has. So
Jason, anything you want to comment about just what your consortium has experienced?
Yeah, well, I just want to pause for a second and say just how amazing that was when Patrick was sharing that story with me on Breaking Banks. This idea that overnight they're like, oh my God, we're also a software company, and to enable that. But then the last part, that they also were leaning in and helping really the groups that needed this the most, and just how important it was. And this is what we see across our consortium is it really was the community banks that were taking care of communities, and they were not shareholder driven. They were stakeholder driven, and their stakeholders are their communities. And we saw, our bank. So we have an internal Slack channel with 400 plus bankers, on it. And just to see the information they were exchanging back and forth at like 2 and 3 in the morning, right, on this stuff, on who's having trouble with E-Tran. And like even just today, as we're starting to work through the first part of forgiveness, saying, hey, there's not a lot of clarity from government on how this is going to operate. And we might end up holding the bag, but we're just going to roll up our sleeves because we got to make it happen, right? Our customers are really counting on it. And sadly, I do think we're going to continue to see a decline in community banks, but they play such a vital role. And I would also say the idea of CDFIs and the NAVs of the world, to fill in these gaps, we can't just all be driven by the mega banks, because we know where that moral compass tends to take them.
Yeah, right. Yeah, and with that, like Nav, as you guys responded to this, Greg, what role did you guys play in it, and
Yeah, it
anything
was,
particular you want to share?
wave one was really hard because we generally, if you think of around small businesses, there's two economies. There's the ones that the banks will service and everybody else. And the CDFIs play such a key role in helping the ones that, otherwise can't just walk into their bank branch. And what most people don't realize is that's that long tail of our Main Street small businesses that don't get served by the mega banks, by the financial institutions. You can't walk in there and say, hey, my credit's bad, I don't have strong cash flow, but I really need just about $20,000 to get this next project going. Banks just laugh you out. And so that community was completely left out of wave one. And they were really frustrated. And we were frustrated because we kept on, because all the non-bank lenders, or most of them except for the ones who already had an SBA charter, were completely left out of wave one as well. That meant that a lot of small businesses were left scared and angry. As you know, wave one got used up within days, like 5 or 7 days. And so it really became difficult. We were knocking on doors with every SBA approved bank. And they said the exact same thing that Patrick said is, we're going to work with our biggest customers, our best customers first, and then the money was gone. And then it took a little over a week, but it was really unknown as what's going to change with wave two. In wave two, they did allow non-bank lenders to come onto the E-Tran platform, and people had a little more time to get their act together, and then we just had to rush. We've done tens of thousands of small businesses, so we're not the lender like the CDFIs are. We just connect them to who had capacity to fulfill their type of need. And this really became the people who, if you remember the first wave, I think the average loan size was $250,000. Those are, and we had all these $1 million loans. We were serving the people who had needed under 100,000, and there are millions of them. We sent tens of thousands of them to our mainly to non-bank lenders, who some had to work back through banks. But I think that the relief started coming through, and then the question on forgiveness, right, as Jason mentioned, has held a lot of small businesses back. So there's still over $100 billion remaining in the second tranche of PPP loans. And there's a lot of small businesses who have said, I'm not sure this is for me. The new forgiveness rules that they came out with last week hopefully will ease some of that anxiety and allow small businesses to tap into this capital. But yeah, it's been a roller coaster, and it's been hard. It was hard internally, but it was really hard on a lot of small businesses.
Yeah, and to that point, Laura, and I'm going to stick with you for the next segment too. What was it like for Pursuit in the response to all this?
Yeah, and I mean, our experience echoes everything that the others just shared in terms of, not knowing what the SBA requirements were. I think, lenders were just, the whole world was struggling with the fact that, Congress approved something, the news pushed it out, the whole world took that as edict, where lenders knew that we needed more information before we could move forward. So we had to figure out pretty quickly, how do we communicate out to our own customers and people who we want to be our customers, the fact that we're still waiting for more information, and how do we develop effective talking points around that? And we ultimately got to that point, and I think it ended up saving our team a lot of time and aggravation, but it was really rough in the beginning. I mean, our story pretty intimately, Rory, but we had to rush to put up an application to do intake on PPP loans. And we made a very conscious decision in our staff, are we going to make things easy for us, or are we going to make things easy for our customer? And we said, we're going to make things easy for our customer. So we put out, really, it's like bare bones, minimal, and I hope none of our customers are on the line, but your experience was great. So you never know. We faked it until we made it. But it was really a minimum viable product that just got your data into us securely and safely. And we were just patching things together on the back end to get the loans out the door. And that was intentional because we knew business owners would be stressed. We knew they would be in a panic type situation, and we didn't want to make the process more difficult for them than we had to. So our team worked, really, really hard to make it a seamless process for customers. I think at our longest, we were 5 or 6 days to approval. And now, we're very pleased to be approving loans virtually the same day that they come in. So, and we're still offering PPP loans, which, I think is unique. A lot of banks have, reached the cap that they allocated for the program. But thanks to the support of some pretty generous partners, we're still able to serve small businesses and really small businesses. I think we've done 10 loans for $100. So,
That's awesome.
you know, like when you think about fee income on that, we shouldn't have made them, but you know, these individuals were incredibly grateful for the loans. I mean, a Mary Kay salesperson, Etsy salesperson, you know, various small businesses that are meaningful to people.
Well, you think about I love that you shared that, Laura, that the heart that I've seen in fintech and financial industry as a result of this, particularly from folks like the four of you and your businesses that you lead and guide every day, is meaningful. And it's at like one heart at a time that we say here at Customer. It's like, if you can impact one person in a positive way, the ripple effects and pay forward is powerful. And so the fact that Pursuit was willing to make $100 loans, which doesn't make any sense. And the other piece of that before that was the thoughtfulness that you and your team had while, you know, working with us in those 24-hour days we worked to get that loan application page up.
Yes.
To make it easy for the business owners, because you were thinking about the fact that they were already stressed out. Let's make it easy on them. We'll deal with the inbound and the influx of all this on our end and not put it on them to take extra steps. So I applaud all you guys for the efforts you're making, the stories you're sharing. I wanted to stay on this topic a little bit, only asking the question, and Laura, I'm going to stick with you, is, you know, what did this expose for your company? And I'm thinking about the folks that are listening now that might be thinking about, you know, the impact of this has affected all of our systems and processes. They've all been stressed or broken as a result of this, or we're having to create and innovate new ones. What did this uncover, if you're willing to be a little bit vulnerable, uncover about the way that Pursuit was doing business from, you know, like a technological standpoint, maybe fintech in this case? Did it uncover things or opportunities that you guys could then innovate and improve?
Oh, for sure. I mean, we're still very much in the weeds with PPP. So as management team and an organization, we really haven't had a moment yet to kind of breathe and come together and say, you know, this is what we've learned and this is how we're going to apply it to move forward. We will get to that point. You know, but the thing that I keep reflecting on is, if we could figure out, we've learned so many lessons about doing things at true scale. A lot of what we talk about in the CDFI industry is going to scale, serving as many small business owners who need our loans as we can, and using technology to do that. And we had this, you know, in the end, the period that was PP will be brief in all of our professional histories. But in that, we got a true sense of what scale is like. Like, what does it feel like to do 500 loans a day? You know, that's what the big fintechs are doing in an hour, maybe. So yeah, it did expose some weaknesses in our technology. And I think we will be addressing those in the coming months so that we'll be ready for the next wave, because there always is one. I mean, Pursuit was there for the downturn in 2008. We were there after 9/11. We were there after Hurricane Sandy. So every 3 or 4 years, there is this moment where alternative lenders and CDFIs play a very, very important role in economic recovery somewhere. And it's always at significant scale. So, you know, we do need to do some thinking about what that means for our technology. You know, how do we automate some of our processes without losing the human touch that's so core to our brand? When we look at some of the customer testimonials that came in from our PPP lending initiatives, you know, 9 out of 10 of them are like, you just picked up the phone and you talked to me. I'm really proud to say that the train fell off the rails one day. There was one day where we didn't get back to everybody. It was the day that that round 1 closed, and we just had 500 people calling for loan statuses. But every other day for PPP, we answered every single phone call, got people their loan status, and this is after they had come from a big bank and, you know, they knew they were in a queue and had no clue. So how do we retain that personal touch, but in a way that allows us to go to scale and eliminate some of the pain points that we experience in this whole process?
That's awesome. You know, with the social distancing and the stay-at-home orders, you know, the industry's talking about digital and how, you know, we've got to go digital, but there's still that human element that's impossible to do completely and as effectively as talking to someone. Or doing a video conference. So Patrick, anything you want to add to that? Like some of the things that indeed, like your fintech solution with Spark was timely and designed for the moment, but was there anything that you saw like inside your organization that were some cracks maybe that could be filled with fintech? Or any other things?
So for us, I think the primary thing that we saw was more on the human side. So just needing to retrain people, overnight, basically, to do things they had never done before, and then needing to hire, 100 contractors overnight to help us kind of meet the demand. And so, and it happened in stages too, right? Like in the beginning when PPP opened up, it's like, all right, we need to essentially turn and point our whole organization at this intake process for PPP. So help people understand the application. How do they actually calculate the loan amount? That was the biggest thing, right? The employee head count, like all of these nuanced questions that come up that maybe the policymakers haven't had the time to grapple with. And so you're trying to provide guidance. And so we had a whole host of people that we swung over to do that. And then as the loans start to move through the pipe, now we're on the back end. We got to train that whole group to close loans now. So we got to beef up our closing department by like 25x. So for us, it was like the tech was actually pretty good and again, very lucky there building around the product like this, but the tech was pretty good. It was how do we quickly wrap the team around the various, parts of the pipe that are getting stressed. And that was, a little bit of a cluster, to be honest.
Mm-hmm.
But we just grinded it out, and like everybody just worked 24/7. Thankfully we have, because we've been doing government guaranteed lending for a long time, we have some real experts on the SBA. So we did have leaders internally, all throughout the process that, either had back doors to actually talk to people at the SBA, which was impossible during this time, or had enough knowledge to steer us and provide us enough guidance. But it was a really dynamic time in terms of just, taking a massive group of people, some who have been at the organization for a long time, others who, have joined us yesterday, and just pointing all of them at these various activities that we needed to execute on to make it happen.
Yeah, Jason, you want to add anything you want to add to that?
Yeah, I mean, you were fortunate that your technology was sound, and one of the changes we're seeing with a lot of banks, it's a running joke that's not so funny anymore, is core systems within banking are not so flexible. They're really good at kind of pounding out the same thing over and over and over again, and banks are loath to go change them. And so the fintechs have always had this advantage in a more modern architecture. Well, modern allows a lot more flexibility than before. And I think what you're going to see in a lot of the bigger or the more mainstream banks that traditionally have said, we're just completely ROI driven. Well, what's going to go into some of the calculus now is some foundational investments to have that sound, flexible architecture. Because one of the reasons the banks had to throw so many bodies at it is they couldn't architect fast enough. And when they did, and the rules changed on them, they were stuck. So I even know a number of banks that didn't bother to improve their technology for round two, because they're like, hey, it's just all going to get thrown up in the air again anyway. And all of our tech was wasted.
Mm-hmm. Staying on that, and then Greg, I'm going to come to you with something too that comes to mind. As I said earlier in the podcast, oftentimes change and innovation comes through crisis. And there's been a perfect chance to stress the systems, to stress the way of doing business, to stress our system and processes. And, as we've moved through this and offered the chance now to hopefully for a few minutes here, at least in between our scrambling to support our clients and the industry, reflect on what's going on. And Jason, I want to pose this to you. When I think about innovating, improving our systems, processes, technology, building stability, but also having flexibility, with Alloy Labs having over 40 member banks, in what ways are you seeing them kind of address this whole notion of moving into recovery based on what they learned in the response and applying new innovation, new technology? Like, what kind of things are you seeing there?
Yeah. So one of our banks actually went and did the math that said, there were a number of digitization projects that we just had put off because we were like, the ROI isn't there. And we're like, show it, saving us a few $100,000, which it's a big enough bank that actually isn't super meaningful. we have lost millions in customer experience. It's things like, hey, if we had a more robust analytics team and some of those tools, what would we have done differently? Having chat bots that we experimented with, well, guess what? That would have been a huge improvement to field kind of the first order questions. Because I'm thinking about, like Laura's point. Yeah, you want to talk to a human, but when you get overwhelmed, what we really need is augmentation, right? And so if it's as easy as, hey, I can get the answer from a chat bot, and that frees up a person for the really hard thing or something that requires empathy. So I think we're finding a lot more of the banks changing their mindset that it isn't about tech replacing people. It's about tech supporting their people to do the job that only they can do.
Yeah, that's a great point. I think that we see with these new technologies and the marketing platforms, I know that we at Customer apply a lot in setting up and integrating, implementing, and supporting for our clients is just something like that, Jason, that takes that human element of it and turns it into like a bot that could answer questions to free up those folks that need to address really tough issues with clients and customers, versus taking those simple calls like I can't log into my account or whatever. Those are all important things too, but so great point there. And I'm curious, Greg, from like your perspective, with Nav being a resource for so many small businesses of varieties of different sizes, like what kind of things did you guys see through all of this? Did it expose anything, any opportunities or areas you're going to improve or change?
Yeah, well, we just, it's part of the same thing that the banks weren't ready to take. We built a digital application kind of like Pursuit did, but then there was no digital, the banks weren't ready to accept anything digitally. And so I think as Patrick and Jason are talking about, this is kind of taking that wrecking ball to digital transformation. I think the new insight probably is that digital transformation doesn't mean removing the people, just as Jason said. Digital transformation means both reducing costs, which is the way banks think about it, but if you take a customer-centered view, it creates a better customer experience. That chatbot experience is actually better, way better. If a customer can get a chatbot to respond in seconds versus waiting on the phone, it's a way better experience. And so I think we're starting to see some of that digital transformation happening. We actually did the opposite in that Nav historically was almost 100% digital. We made an acquisition last fall to bring more human support in facilitating connections for loans for people. And so trying to find that middle ground is where it was. And that was really revealed in this crisis. Similar to Laura, our call volumes went up almost 10x. We scaled to meet that. People want to be able to talk to people. But the good news was we were already set on systems, so we could look at cash flows and everything like that automatically with the click of a button to help those small businesses understand. We helped a lot of small businesses with eligibility. What would they actually be eligible for? And now we're helping them understand what forgiveness they're going to qualify for. And we can do all of that because we're digitally integrated to all the checking accounts. We're digitally integrated to all the credit bureaus. And so that actually creates both that reduction in cost and a dramatically better customer experience.
Yeah, and it's all through identifying those issues, right? As they have come up and exposed so much through this. Is there anything that you would say, Patrick, along those lines, when you think about the direction now that in the experience that you guys have had at CRF and Connect to Capital, marketplace changes, communication strategies, technologies?
Yeah, I think what we are, and we've started this early on, so we've been thinking about this for quite a while, but we're moving from a place where the PPP product is really a revenue replacement product. It's an emergency product for businesses. So what is the next phase of this? And the next phase is these economies reopening, the sort of restart, retool, all that kind of stuff. And so we're thinking about the product development process for what needs to be there for the businesses that have a viable path forward. And how do we identify those businesses? How do we reach them? And so one example of that, 2 weeks ago, through a collaborative of a number of CDFIs, including Pursuit and others in New York, collectively launched the New York Forward Loan Funds, which Governor Cuomo announced a couple weeks ago. We've had about 400 million in qualified requests over the last 2 weeks. It's about 8,000 applications, qualified applications thus far. It is a consortium of 5 CDFI lenders. And what we've done is we've sort of used our motto has been centralize everything that ought to be centralized and localize everything that can be localized, right? And so for us, what that means is, how do we create a front door, a uniform customer experience for the application process that, is a really easy, smooth, delightful customer experience? How do we use the tech then to farm out all of the different leads to the 5 different originators that are a part of this process? And then how do we rely on them to do what they do best, which is they've built up social capital in communities across New York State for decades now. And so they have trust. They have trust of their customers and of new applicants. They have a deep understanding of the economics and dynamics of those communities. And so really we've just kind of stepped in with Connect to Capital and provided the linkage there. And then what we're doing around the actual product itself. So each of the originators is putting out this standardized product that has allowed us to access sources of liquidity for all of the originators because it's a standard product. And the product itself, it's long-term with a built-in sort of payment holiday up front. It's really supposed to be tied to the revenue projections of the company, right? So it's also being offered not at all on a first come, first serve basis. So as the governor starts to open up different counties and geographies, as the governor starts to open up different industries in New York, the product, the deployment process, the policy objectives of the program are all tied to those things and really tied to, again, the viability of the businesses that we're looking at. So, unfortunately, we know a lot of businesses are not going to make it through, or they're going to go do something else. They're going to create another startup, whatever it may be. This program is really focused on those businesses that have a path back and that just need some long-term, a long amortization, some flexibility up front, and they need time to be able to make the investments to get their business back up and going. And so I think that's really where a lot of our thinking is now, is what needs to be true in this next phase, post PPP. And then we'll think about what needs to happen in the next phase. But I think right now it's like, we're talking 30, 60 days, maybe 90 from a planning perspective, and everything else is kind of out the window.
Yeah, and you mentioned something that I want to stay on that thread, new programs. So I wanted to maybe do another quick round, and I want to leave a little bit of time for Q&A at the end. So Greg, I want to go to you and thinking about that, staying with that, new programs, new products, new services. As a result, of all that we've learned, and maybe you've already done this, but do you anticipate the need for creating any kind of new products or services as a result of this, maybe for the near term or for the long term?
There absolutely needs to be. The traditional models of risk underwriting now have changed, because it's very hard to tell, is this business going to be a going concern in the future? As Patrick was saying, you can work really closely hands-on with a few of them, but at scale, whether it's a bank loan product or a non-bank loan product, they were built on the sense that the past was a perfect prediction of their future, and that information from the credit bureaus was accurate in a prediction of the future. All that's been tossed in the air. And so how do you underwrite, or importantly price risk for small businesses in this environment, is incredibly different. And that does tend to lean towards different types of products. I think that you start to see more that are going to be revenue based or invoice based. Those products are already come back and do that. And a lot of those products have been historically, to be pretty frank, have been somewhat predatory, and a lot of factors for small businesses, they didn't understand what they were getting themselves into. We're starting to see some, I think that's probably an area that there is some new products to be created. I know a lot of the non-bank lenders, who are probably a little more innovative and creative, are working on new solutions, but they've all been pushed to the sidelines right now. And I think their first priority is understanding how their existing portfolio is going to behave. And then new product introductions, I would imagine, start to come later.
Mm-hmm. Okay, super. That's great. Laura, how about you? Anything you'd like to add to that, or anything you're seeing?
Yeah, I mean, I think what we're thinking is, how do we frankly took some of our products off the market because people were applying for them and it wasn't going to be a good fit for them. And they were doing that at a volume that was disruptive to their workflow and our workflow. So I think the first thing we need to think about is how are we smart about bringing those products back? When do we bring them back, and with what tweaks to the underwriting and requirements so that they meet the needs of the small business owner? I'm speaking specifically of our online loan product, which is the Smart Loan. We designed it as a safe, reliable alternative to some of the predatory things we're seeing out there in the market. And it's a fast loan. That's why people were applying for it. So how do we think about, bringing that product back in a smart way? I think Pursuit has the benefit of relying heavily on the SBA loan products, which have always historically played an important role in economic recovery and are things that are products that are really healthy tools for businesses that are in recovery mode and that can't qualify for bank financing. We are figuring out how we're going to position our 7A loan program, how we're going to position the 504 commercial real estate loan program, which actually has a really nice refinance component that can help business owners lower their monthly mortgage payments and free up cash to infuse back in the business. So how do we reframe those in the light of COVID is what we're thinking at this point.
Okay. And Jason, anything with Alloy and your consortium that you're seeing?
One of the things I think that both Patrick and Laura pulled up that is really important is this idea that it's not like suddenly we're done, right? Economies have opened up and it's back to the normal it was before. We have to really start thinking about what the new normal is going to look like. And I love CEO of one of our banks, one of her board members said, never waste a good crisis is an opportunity to change. And so maybe this is some of the change we need to be seeing.
Mm-hmm. Yeah, and the leading through crisis is something that we all need to do as leaders of our organizations, our own families, our own communities, and the positive impacts you guys are making. There's so many stories. I know I've heard a few of them from you guys today, but there's so many more. I'm sure that I would love the chance to follow up with this. I think I could go on at least for another couple hours with you guys. There's so much more to dig into here. But for now, what I wanted to do is shift gears to let you guys address some questions that some of the folks have come in with. So I'm going to start out with Emily Traxler. She's over at First Rate, and she said she's asking the question. I'm just kind of read it out here. How does technology play a role in future years in like digital transformation, NLG, machine learning, artificial intelligence? Where do those have a focus? Anybody want to take that? I can. I'll start.
Happy to as well.
Yeah, go ahead, Greg.
I think the technology transformation is usually driven when the focus flips from how does it benefit my company to how does it benefit my customer. Mm-hmm. And I think what we're starting to see in the use of machine learning and data science is it's got to actually solve a customer problem. And just like Laura said, customers tend to gravitate towards easy. Fast and easy tends to win. And if you look at where digital transformation has occurred in other categories in industry, online shop, so it's just easy. Why do I still go to Amazon? I don't know. It's just easy, right? And so I think that in financial services, fintech is about making the world easier largely for the borrower, right? And those are I think people who try to embrace that are going to win. And so there's so many stages of the borrowing process that are cumbersome, are bogged down, could just be made easier. And I think it's going to be peeling that onion, and you start to see each of those technical applications trying to streamline that process. Mm-hmm. I think that the data science part is a big one, right? Where you actually can make smarter decisions faster, because that's where so much cost gets used up, is trying to make decisions that end up in no. Mm-hmm. If you can make your no decisions with technology, you reduce cost dramatically. And so, but I think it's going to be that shift towards how do I think about easing my world for the customer versus just making my own company's world easier.
I think I would just add to that, Greg, that AI and machine learning do play a pivotal role today in a lot of things we do, from underwriting to offering credit to different types of things. One thing that we believe in here at Customer, not only our name, but it's who we support and empower, keeping the customer experience at the center of everything that we do. We collectively helped to drive some of those decisions where we have that opportunity in our companies, as we're not big FIs and we don't represent big FIs today. To some degree, we're serving the smaller markets, although goals to grow from there, but keeping the customer at the center makes those decisions easier, Emily, I think, and looking at how technology can play a role for those companies that choose to look at it that way, just not look at it from an ROI perspective, allows us to apply machine learning and artificial intelligence, as Greg said, to answer questions really quickly, to get to the dough faster. It gives us more opportunity to address the market and the needs of customers that we can serve, and to point those others that we can't serve in a direction, in a humane way, that is really doing it from an empathetic standpoint. The turn downs are the worst. Like, there's too many of them. What do we do with them? That question hasn't been answered very well, I don't think, in the decades I've been in this industry. But maybe through some of this transformation, and because we're all in this together, and we've all no choice but to be in this, we have no control over it. I think from a human's perspective, it's really positive that we're all in it together for the first time in my lifetime that I could think of, where we all are behind something because we have no control over it. Everybody's staying at home, everybody's working remotely, everybody's economy shut down. So what a brilliant opportunity. Never waste a crisis, Jason, as you said, right? Like, this is an opportunity to reflect and to look at these things. And Emily, I think that was a great question.
Rory, just real quick, one thing I would add to that, which is it's just a specific use case that we think about in our market for AI, machine learning, all this stuff, is, and we're just working on a partnership with an academic partner to start figuring this stuff out, is it gets to Greg's comment, like, the fact that credit scores are all built on what happened in the past makes them way less useful now. One thing that we think about, particularly with the entrepreneurs that we serve, is this idea of like a grit score or a tenacity score. Like, how bad do you want it, and how do we measure for that? And so, and that, from my experience, is not terribly correlated with credit, you know, and we see a lot of examples where that's not really very correlated with credit. We've lent to people that have, we're not underwriting their credit score at all. We know what it is, and it's not great at all, but they just want it. And so I feel like that's the idea of entrepreneurship in a nutshell. And so I think there's something there in terms of being able to develop an alternative score or concept around grit or tenacity or whatever it is. And I think that AI, machine learning can help us with that enormously.
Yeah.
One of y'all mentioned, you know, some small businesses, their businesses may not make it, but it's just a question of what's the next business they're going to start.
Absolutely.
Yeah. Yep. Right.
Those are ones you want to work with, because you know those people, they're going for it.
Yeah, and if there's this measurement of, like you said, grit or tenacity or success ratios that aren't tied to credit score, whether it's business credit or personal credit, like, again, this is another one of those things, we're all in it together. We all got impacted in different ways. Some companies, if you're in the outdoor inflatable kayak market, you're doing pretty darn well right now because they've sold like crazy, they're sold out. But for other us in, you know, hospitality, resort, things like that, they're getting crushed. So, and the same thing for any small businesses that we support through the work that we do that are accessing credit or lending. Very difficult. Anything else you guys want to cover on that? Then I've got another one here. This is from Curtis Nally over at Lending America. He asked the question, from what's happened through, and I'm going to paraphrase here, approval ratios have dropped by upwards of 70%. When do you project approval ratios on unsecured and secured lines of credit to go back to normal levels?
The $1 million question.
Yeah.
Yeah. I'd say, Curtis, that's a great question. I think you got some of the brightest people in these 4 people on the phone right now and on this meeting that can't answer that very well. I think as we move through recovery and we address some of these, like Greg, we were talking about new products, new services, new offerings.
It's going to be dependent on new products. If you took the exact same product set, it will never get back to normal. If there's no innovation in what's offered or how it's underwritten, to Patrick's point, like, it will never get back to normal. And so it is incumbent on the service providers to innovate and to come up with new products. Otherwise, there's going to be an even larger unserved market out there.
Yeah. Okay. Anybody else want to add to that? Awesome. Awesome. Well, we're running short on time. I just wanted to offer up to any attendees, if anybody has any questions, now's the time to post them up there. You can go down the Q&A at the bottom. We'll give you a second to do that, and then we can kind of talk about next steps from here. All right, so one of these last ones, it's a little, I mean, I don't know if it's exactly on topic, but it's a good question. It's from Benjamin over at Tunnel. At this time, for those startups that are in between MVP and launch, what's the best way today to show market fit when we have yet to release our products to customers? And what metrics are most available to see? Example, bank sandbox integration, LOIs, apps in beta, etc. Tough time to go to market, depending on what market you're going after.
Well, at least if you're going to market now, you know that people are looking for distractions. You might find some false positives in terms of how they engage. Even without a pandemic, with my investor hat on, this is one of the more challenging phases of kind of a startup and a product's life anyway. On one side of it, you're like, I'm just selling vision. And so, vision is about understanding, passion, and customer empathy. And then, the phase after this is I have real metrics that I can be putting up, and you're in the kind of death valley in between. Mm-hmm. More important to me in terms of, like, again, with just my angel investor hat on, is I'd like to see engagement with what you have, not just the number of betas, but what are the betas doing with it? And even more than just being able to say, oh, we have really high engagement because of X, what insight can you draw from it? And then, be able to kind of stitch that into, so what does that mean for the future?
Mm-hmm. Great. Okay. Yeah. And I've got, I'll share some more details, and Jenny, I'm sorry, we're running out of time here. I'll address your question separately once we get off. I'm really grateful. I'm going to speak on behalf of everybody that joined today, and for the customer team and just the industry in general. I'm so grateful for you guys taking the time today out of your busy schedules to share your insights, share stories. It's great to hear you guys, what you're doing, kind of boots on the ground, one by one. And like I talked about, heart by heart and business owner by business owner. This is the way that we win this thing, I think, and that we come out stronger as we just do it one touch at a positive touch at a time. So I'm excited to see where innovation takes us from here with that digital transformation and innovation as we approach the next 60 days, the next year. Who knows where we're going to go, but with people like you guys, we're in good shape. So really appreciate you guys. And I'm going to be hitting you guys up individually. And for those of you that are still on, I see we still got a great group of people that are still on. We might sidebar some of this stuff at a future date and continue the dialogue, dig a little deeper into some of these things. So be looking out for messages from us here at Fintech Shares. And in the meantime, God bless you guys. Thank you so much.
Thank you, Rory.
Thanks, Rory.
Take care.
Bye, everyone.
Thank you.
Bye.